Hello, Oracles. Welcome to my new studio. I have moved it down here. This is going to be in the addition of my house that I've been telling you guys who have been following the channel for a while. This is where it's going to be moved. This is going to be my new home location. So hope you guys enjoy it from here. And we're going to kick off the new studio by discussing what we could be seeing in the stock market over the month of September. A lot of things that are going on in the macro environment over the next month that are going to move the stock market significantly in one way or the other. So I just wanted to kind of present to you guys what we could possibly be seeing and why the stock market may be moving when you guys aren't sure what's going on. So if you guys could do me a favor, hit that like button down below, subscribe to the channel. Since I've changed the direction slightly in the channel, it helps the algorithm kind of pick things up and put it in front of more people's faces going forward. And a lot of you out there have told me already that you haven't been seeing my new videos. So if you guys could do me that favor, that'd be a huge help to the channel. All right, so to start things off, historically, September is the worst month for the stock market. I think a reason behind that is strictly because of elections. So typically September and October, we have a lot of the election cycle that's going on, and elections will typically bring a lot of uncertainty. We've discussed many times in the past that uncertainty is the number one thing the market does not like. So when there's a lot of uncertainty in the market, there's a lot of people who pull money out and just sit on the sidelines until they have more certainty and clarity as to what is going to go on. Obviously, going through an election, depending on which party you're looking at, could determine which stocks or companies are going to perform better after the election. So a lot of time, institutions will take a lot of their money, put it on the sidelines, and just kind of wait to see what's going to happen, who's going to win the election. And that's why you typically see a nice little run into the end of the year when it comes to the stock market post-election. So it's typically market-wide, but there may be some sectors that do better than others, depending on who ended up getting elected. So I think that's a big reason why historically September is the worst month in the stock market. So with that said, just understand that could be a big reason why the stock market may be down this month. Now, nobody knows for sure what's going to happen in the month of September, but again, historically, it has been the worst performing month. So if we end up getting there, just know that is just normal historical trends. So now I'm just going to take you guys through chronologically some of the bigger things that we could be seeing over the course of the month that are going to impact the stock market one way or the other. So the first one is going to be the jobs report. Now this is a big one because as Jerome Powell had said most recently at the Jackson Hole Symposium, they basically feel like they have inflation under control and their focus now is going to be on unemployment. We have been seeing unemployment climbing up rapidly as of late, so their whole goal right now is to make sure that that does not get out of control, because if that ends up getting out of control, that is typically a signal that we are going to be going into a recession. We've been seeing a lot of recessionary signals coming up. We don't want this to be another one. So the market is pricing in a better jobs report and better employment numbers than we saw last month, which is exactly what the Fed is looking for. But we're going to be getting those first jobs numbers coming out on September 6th at 8:30 a.m. Eastern time. And again, if we get a good jobs number and some signals that the employment is going to be doing better and we're going to be kind of turning that trend back down and becoming stronger, the market is going to cheer that. So that's going to be a good signal. So that's going to be the first one that we see coming up. Next on the list is going to be the CPI report. That comes out on September 11th, again at 8:30 a.m. Eastern time. We do not have a forecast yet, but we have been seeing that trend coming down. This is again why Jerome Powell has said that they feel like they have inflation under control. We have been seeing a steady drop in inflation year over year, and the number last month was the first time we had seen in several years with inflation under 3%. So if we can continue this trend going forward, that will be another thing that the market cheers. However, one thing that we want to pay attention to is to make sure that we aren't going down too fast on a month-over-month basis. Because while, yes, seeing inflation coming down is a good thing, we do not want to see deflation coming through. Because typically deflation means that we are going to be heading into a recession, because deflation means there's less money coming in. There may end up being more layoffs that in turn kind of self-fulfills its prophecy of even less money coming in because there's less people with jobs, and you kind of spiral downward. So we definitely don't want to see deflationary pressures, but we do want to see inflation steadily come down with the jobs market getting stronger. That will give signal of a stronger economy going forward. And then the big one week after the CPI release, we are going to be getting the FOMC meeting on September 17th and 18th. The 18th is when they are going to be announcing what the Fed cut is going to be. Now, Jerome Powell has already signaled that we are going to be getting a rate cut in September. He said it seems like it is time to be doing this. Now, the market had initially been pricing in a 50 basis point cut, but it sounds like the Fed is going to be moving very slow when it comes to this because slower they go, the more time they're going to have to see how these are going to take effect. But we are also still technically recovering from the hikes that they did about 18 months ago. So when we're looking at all of those different numbers coming through, the Fed going slower when it comes to cuts might actually be more detrimental to the economy, kind of ensuring that we get to a recession. But you have to remember that it is more important for the Fed to make sure that inflation is gone because inflation will destroy economies. Recessions don't. Recessions actually kind of flush out a lot of the bad stuff and bring us back into a stronger foundation to go to a better place in the future. So, yes, recessions really suck and hurt at the time, but they kind of clean out the dirt, they clean out the grime, they clean out the trash, and give us an opportunity to become stronger going forward. It's like cleaning out a wound. You need to make sure you clean out the wound well, and then that way it can heal properly. If you don't allow that to happen, you end up getting some sort of problems. You get infections. You don't want that. You don't want to get infections in the economy. Inflation, on the other hand, once that gets going, you can't stop it. It's like bleeding that's out of control. So you don't want to get to that point. So the Fed is way more concerned about inflation than they are about a recession. So if they end up going slower to make sure that they keep inflation down and make sure they keep it going in that direction, and it causes a recession, they're not as afraid of that. So that's why they're most likely going to be going with a 25 basis point cut, and they're going to be going much slower. But again, that's just my prediction on this. But we will get those official numbers on September 18th. And now with that, the market is technically still pricing in that 50 basis point cut. So if we get the 25 cut, we may see some time going into there where the market kind of prices in a 25 basis point cut. We still have time, but just brace yourselves because it could also lead to a situation where it's a sell the news situation. The market has already priced this in. We know that we're going to be getting that cut. So is the market going to be selling off even more after this when a lot of retail investors are kind of thinking that we're going to go up? So this is where institutions come in here and play those dirty games of knowing that retail investors are anticipating buying at that time when institutions are going to sell. So institutions know that they got buyers, they're going to be buying that and they're going to tank the stock market, leaving retail holding the bag. It's a lot of times what happens. I don't know if that's what's going to happen this time, but just be prepared. All right. And then, of course, we have the election, which we had already discussed. We have a couple of debates that are going to be going on this month as well. And this is just where kind of things ramp up. And not just from a presidential standpoint, but, we've got the Congress going on as well. And those are the ones who are the lawmakers. So a lot of election stuff that is going to be going on over the next 2 months. So again, as that ramps up, we increase that uncertainty. We increase a lot of that turmoil that's going on out there. And that's going to increase the chances that the stock market may sell off a little bit. And then lastly, we have the end of the quarter rebalancing that's going on. So you may be thinking to yourself, well, why is September going to be the worst month out of the year due to potential elections and not October? Well, September also has that end of the quarter rebalancing. Now, you get to the end of quarter rebalancing. This is where we're already in uncertain times due to the election. And then institutions are out there selling a bunch of different things, buying a bunch of different things. Maybe they want to put money on the sidelines just because of the fact that we don't know what's going on with the election that's coming up. So there could be a lot of selling off going on at the end of the month with just people kind of sitting on the sidelines waiting to see what's going on. So they're taking the cash and say, hey, I did really well in these companies here. Let me sell a bit of that off just to kind of thin things out, trim a little bit off the top, put that into my pockets on the sidelines. Maybe there are some that are a little bit sold off that I want. Maybe we are anticipating a recession and we want to put some money into REITs, which are doing extremely well. That's one thing to pay attention to as the Fed is cutting rates. The REIT sector has been booming as of late. Those are real estate investment trusts. They typically end up giving out high yields when it comes to dividend payouts. And because of the interest rates coming down, they're going to flourish and do even better. So that could be a place where institutions end up putting some money. We've already been seeing that happening over the last few weeks. So that could be a place where people put money, or they could just be putting it on the sidelines. We've also been seeing interest rates coming down when it comes to high yield savings accounts. My SoFi account went from 4.6% to 4.5%. When the Fed cuts rates, I have no doubt that's going to come down even more. So people will be putting it into the high yield savings accounts because it's still a safe place. But as those rates do come down, that money is going to end up coming out of there. So there may be just kind of a lull when it comes to buying in the stock market until after the election, getting that timing down as far as rate cuts and putting money into places where investors can get a higher yield. So that's kind of what I have for the month of September. Again, breaking it down quickly, we've got the jobs report coming out on the 6th. We've got the CPI data coming out on the 11th, FOMC meeting the 17th and 18th, and then we've got the end of the quarter rebalancing coming at the end of the month. So again, just those things going on over the course of the month, just so you guys understand why the market may be moving one way or the other. In my opinion, I think we will come down. I think we're going to get some great buying opportunities this month, but I could also be entirely wrong. Maybe the market tricked me and we're actually going to go up this month. So do not take this as financial advice. This is just strictly my opinion as to what I think is going to go on. And for me personally, I have a couple of ETFs that I'm going to be selling out of this week. I'm going to be selling out of KLIP and I'm going to be selling out of HIGH. Those two there have been underperforming for me. And with rate cuts coming, I don't think HIGH is going to be performing well. They have already cut their dividends. So I'm going to be selling out of that to put some cash on the sidelines. KLIP, I'm going to be doing the same. And I'll distribute that in other areas of my portfolio to shore up the places that I'm more comfortable with and feel more confident in. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.